All right, let's see how everybody's doing tonight. Sorry for the delay. Truly apologize. Sometimes the evening sessions are a little bit more difficult. Just depends on the kids' schedules and so forth. So we're going to go ahead and chat a little bit about some stocks today. I'm going to go ahead and pull in some of your questions here real quick. I have to get my chat here going, and then we'll kind of go from there. So I'll give everybody a few minutes, just to kind of get started. Yeah, I truly apologize. Just evening sessions are always plus or minus 20, 30 minutes for me. So we'll chat about, I've got some things coming up. Hey, good evening, William. Good evening, Oksana. Some of you guys are on different time zones than me, I know, and so it's a lot easier. California times and so on, so definitely makes it easier. Okay, let me go into my trading panel here. If you have any specific stocks you want to go ahead and cover, just type them in. We're going to go over those. And we'll kind of go in detail. It's not really just specifically me talking about, top 10 stocks or anything like that. It's just, we'll share some insight. I'll give you some thoughts about some of the stocks. I'll also go in and just answer some of your stock questions from a technical chart perspective. So we're just going in and go and take a look at those as well. All right, so let's kind of get started. We've got a couple things here right now that's popping up. And just send a quick message on Discord. Okay. Live stream. Okay. All right. So let's kind of get started with the market. Just give you a big, broader overview. Those of you that are new, you can definitely go in and check out the Discord link. If you're joining us from outer space on the internet, you can join the Discord link. You can request tickers as well. I'll cover some of those, my own personal insight from a technical analysis perspective. When you look at technicals, remember that technicals they're never going to work 100% of the time. They're going to work, part of the time. They're there to give you an edge. I talked about something with Jeff a while back, where I was looking at nibbling a bit here on JP Morgan. This is what I did, because when things are oversold, and you can see it on the technicals, right? Sometimes it could be a positive thing. Now, anytime, at any point, this can actually work against you, and this thing can actually go down. But at times when you're looking at technicals, is you're just trying to get a little edge, right? So when things are overbought or oversold, you're trying to do the right thing at those times. So this way it gives you a slight edge. And this way, instead of normally, like a stock has, at any point, you have a 50-50 shot. Just in general, you just have a 50-50 shot. Because if you look at the money things, nobody knows what the heck's going on. It's a 50-50 shot. So when you have a technical thing that's way oversold and you actually go long, that 50-50 might turn into a 60-40 shot. So you're increasing your probabilities. And that's what you're aiming to kind of do. So with technicals, you're just trying to get your edge maybe from a 50-50 to a 60. Because in the business, if you're really looking at it, nobody knows a dang thing. And that's why the spreads, when you look at the money spreads, they're just priced the way that they're priced, right? They're just priced a little bit kind of like nobody knows anything. So if you look at the money straddles. Okay, so let's take a look at some of the markets here. You can see we've had some massive selling pressure recently, and we're trying to get a pop. Be a little more careful here as we get into these levels that we don't reject back. Okay, so we do have a start of the month. Usually new money comes in every month. So the reason that happens is because, let's say I'm managing a portfolio for somebody else, and I've got $1,000 at use, and then new month comes out, I got to send them a new report. Legally, I have to go in and send them some more insight on, hey, what's going on? What's happening with their money? What am I going to do? So I need to put that money to work somehow. So come February time, it's like, okay, January was bad. So now what about February? What are you going to do with my money? So they have investors that they have to answer to. So in February, they got to put money to work, and they're going to say, okay, well, these are your new positions. This is what we're going to do. We're going to try to get these stocks. And then we're going to see if that's actually better. So, than the previous month. So they're rotating their money, around. But this is where oftentimes the first of the month, kind of the second of the month, could actually turn to be more positive. So usually what kind of the beginning of the month is, the first week or two, will run the course of the next part of the month. It's kind of like if you had January where we had some choppiness, this first, week or so, the rest of it was kind of the same way. So we could continue to be a little more positive, but be careful that this doesn't go in and press back down, because, it's really nice and convenient if this comes down right here, retested that level, and everything's good, rosy, and we're good to go. But if you look at any pullback, even recently, they retest like twice, right? If you look at this pullback here, look at that. They retest kind of a couple times in this range across maybe a month or two. So this part is nice and it feels good. Hey, we're just down and we're down once. Are we going to retest again? That's a bit of the question and the problem. All right, William asks, okay, this may be a stupid question. No, never. But today, looking at a trade like XLK, AMAT, WIM, and I've never seen a bid ask so different. In the money was 10 wide. One out of the money was 30 all the way to 70 wide. Yeah, they'll spread, the wider those bid ask spreads, the more you need to be a little more careful. I'm gonna bring this back to kind of my face. I have to log in on one of the panels. And but yeah, the wider that you set up the bid ask spreads, then the more problem you have, because they're trying to budget accordingly. When you have a really wide bid ask spread, it really becomes a problem. So you have to be extra careful. And the way you'll see that here, I'm going to show you in 1 second. Let me see. I've got, let's see, here it is. Okay, just because I have to log into the other platform and panel. I just want to make sure I get that right. Okay, and then, so what you do is you get a bid ask spread. You look at the at the money vertical, and you start comparing a few to see what the skew is. That's how you kind of get an idea of what's going on. So if we go in and we go to, let's just do XLK for you. This is the technology trust. So I'll go to the 30-day. And we'll do a vertical here. Boom. A $2 wide should give me a full dollar, right? So this is a $1 wide. Let's go one kind of in the money. I'm $1.53. So I am paying huge money for a $2 wide. And even if I go here, let's go 64 and a 62. Okay, there's $1.10. Let's see. Even this is $1.10. Okay, and the way you start looking at the other one, let's do a blast all. Okay, by vertical, and then it goes 64 and a 62. It's like, what the heck is going on? Buy this, sell that. It should be the same. So something's weird. Like, I think this is mispriced right now. I have to see 64 and 62. Like, it's just too weird, right? Like, this should not be, it's that skewed. If you look at, and I see what you're saying. Let's go to a 30-day here. I worked really well on, with this on with Jeff not too long ago. Let's see, here's a 45.47 and a buy vertical. Here's a 45. So these should be really close, right? But they're not. 45.47. Even if I go to current prices, 45.46 and a, so go to 46 and a 48. Let's try that. Should be about $1. There it is, $1.05. Let's try the other one, 48. And this is how you see like what's pricing a little different. Okay, see, these are much more close. 105 and 99. They should be near identical if the price was near identical in the middle. Obviously you have some skew, but this is more realistic pricing. But some of those, the skew is way off. So be very careful. And this is kind of one way to look at it. Okay. Let's go in and start taking a look at some stocks. One thing I will note, watch out for earnings. If you want to check out for the earnings, go into the market watch, uncheck them all, and check the earnings. Okay, so you've got market watch, calendar, go to earnings, and then you'll see here like after earnings, or sorry, after market, before market, and you can see the symbol. Not all of them are kind of great, but you'll see here we've got a bunch of earnings on a certain date, right? So you can check which date. Right there, there's the Tuesday before market, and then we've got after market, and there's all the earnings. So right now we should have some of the big ones. AMD, okay, earnings 2-1 verified right there. So if you type in on any of the news reports, it should have something. AMD stock rallies more than 10% after record results, below past street views. So the earnings butterfly that I did bearish actually goes against me, but the point I did that one was to hedge my long stock position. So I got long stock, but I did an earnings trade for a bearish move just in case, and that way it kind of makes it just in case as a hedge. So okay, so that's how you do the earnings. So as we look into these stocks, there's a ton of them out there that today we've got a lot of volume that came into things like UPS. UPS is powering higher. So this is kind of one that's starting to take off. It's been digesting for sideways for quite a while. If you have tickers you want me to take a look at, just pop them in to the chat. So we got UPS pushing higher. It's still kind of the first day. It's through earnings. AMD is probably going to go in there as well. So we'll see. It's going to aim to maybe hold this price level about 111, 112. So 10% higher is going to be 10, 11 points higher from here. So, so let's say 10, it'll be 126, somewhere over here. So we'll be trading between these ranges here. So if we're back in this range, we'll see what happens. But, come up here, maybe power higher. But, we got oversold here from a lot of the tech. And we could be pressing a bit higher. Netflix been moving really well. I actually tried to get into right here yesterday, but I couldn't. I did an example on it, actually on the platform, buying kind of a vertical, but I couldn't get in it. Like I couldn't get filled because the pricing was off. I mean, I could have paid up for it, but I just didn't get filled. Normally what I do is I kind of send off my trade. So I just put it in there. And if I get filled, great. If I don't, I'm not going to really bid up or pay for it. It's kind of like, I'd like to get filled, but I don't need to get filled. Google went up and is doing a 20-1 stock split. Yeah, I could see Google, it's pretty expensive from a stock perspective. But from an options perspective, we kind of like it up high. But I think a nice sweet spot for options I find is like a $200 to $400 stock to about a $1,200 stock. When it gets into like 3,000, like Amazon is the same way. It makes it a bit more difficult to trade. It's like wrestling an alligator. So I find like a nice sweet spot, actually, like something like a Netflix is a good, nice premium versus the price. I kind of hated it when Apple took a nasty split way back in the day. It was like $700, $600, and now it got split, and then it was like $90 or $80. So, okay, so let's take a look at some of these. Here's some more. So Netflix powering higher. It's trying to fill this gap right here. And still continuing, after this oversold condition, which is no surprise. I mean, I've been trying to get filled on it for a while, but now I think I'm at that point where I'm nearly missing the move. I just couldn't have gotten good pricing on it. Like I'll put the trades in the last day or two, and it's just not filling me. And I'm okay with that. I'm like, okay, well, it's not filling me for now. I'll wait for another day. AMC, for those of you guys that are trying to trade this, like the trend is still kind of lower, right? People are going to hate me for saying this because people that trade AMC, they love it. The trend is still lower, but you got support kind of right here. And then you got resistance right at the $20 level. So when we look at something like this, we got 20 at resistance. We got 15 at support. So right now you're in this range. If we can break through the 20, that could look okay. 15 looks okay from a hold standpoint. But if you're doing like something like a 50-50 strategy, the time to get those is when the stock is diving, right? Somewhere over here. looking for a snap up. Exxon Mobil, if I was to do a trade on it, I'd probably go bearish actually. So again, if I'm doing like an at the money trade, I'd probably actually buy puts on it because it's just so extended. The problem with this is, again, earnings. So what's going on? The earnings get released? So I was kind of waiting. I didn't do anything because of the earnings. And now we'll see. It should be kind of done right now. So Exxon Mobil earnings. If you check it out for top estimates and oil gas prices soar. So, I mean, gas prices are going up great for the stock, bad for the consumers. But from a stock perspective, like what you're doing is you're looking for a shorting opportunity when things are really good. So this way, hey, I put it in somewhere here. Maybe it keeps going higher, but in the next 40 days, maybe it'll pull back somewhere there. And you have to kind of wait for earnings to make that happen or put that trade in, you know, and kind of work it. Okay, this hood here. A lot of these stocks are like oversold in some cases. So you're starting to look for, hey, when are these going to turn around? I will say that the whole market as a whole is going to try to push higher, and even bad stocks will attempt to look good and they'll start sucking you in. So it doesn't matter on the stock, they're going to start looking good. So this stock's been going down like forever. And it's starting to kind of roll a little bit, but a lot of shares are traded. A lot of people kind of are rooting for something like this, and it may happen. But if you see this descending trend line, it's starting to break that and it's starting to kind of rotate back. So if we continue moving here and we pull back to retest and we can do that, then that could also turn into something good. But you'll see that with a lot of stocks, like UPST has been down for a while. So again, we've been going down. Again, we're starting to break, we're starting to move. This $100 nice sweet spot. This stock was huge, you know, it was at the 400 and things were good. And you can see maybe it'll keep going higher, but what we want to see is kind of power higher, pull back and retest to make those higher lows. Okay, AMD we've talked about. So this one, you know, probably just oversold, snap back up. That might be pretty good. Spotify also trying. Normally these music companies, though, they do not do very well. I typically would short these companies. So I'm kind of waiting for this to kind of power up to maybe about that 300. If possible, then I'd probably look to start shorting something like that. SQ as well, looking good, right? Like it's like if a lot of these are starting to look attractive, but what you don't want to get into is the sucking in from a dead cat bounce kind of. And what may happen is that these things go up for a handful of days or even a week, and then all of a sudden you roll over and you get an even nastier correction and you get square at like 80, and it's like, whoa, I didn't see that happening. All right, William asks, can you look at IWM, QQQ, and SPY for support and resistance? Yeah, so SPY we kind of chatted about right here. So SPY's got some critical levels at the 430 was kind of like what I was looking at, and I was nibbling a little bit on that, nothing huge. So I'd watch that. I think we will get into maybe some trouble here. It's breaking that 450 right now. Like it's moving higher, and this is good to see if you're like long, but this thing could, you know, hover above it for a little while, just like it did here, you know, hover above it, and then it could pull back. So be careful. But 450, 430, those are some key levels. 420, this was a panic area that we saw. So right now, from a price perspective, we look okay, but will we kind of come back to retest it? That's the question, because as I showed you, it doesn't just happen one time. Yeah, Lucid's been toast. I was actually long on it for a while. Let me finish up IWM here. IWM was sideways for a long time. Okay, and then we broke that level. I think a critical support here on IWM is right here, which is kind of the 2-year time frame. So if we look at this is kind of your $170 price level. I think for now, on the shorter term, you're looking okay at the 190 because it brings it back to this swing low. Okay. So from a technical perspective, but you got to watch out for the 210. So if we get here and we're getting to the 210, and then on the SPY, we start getting into kind of this price level somewhere around here where we get into some trouble and we roll over, like all three of them can have some issues here. And QQQ, which is a little more tech heavy, if we get into here and roll over, that all can be a bit of a problem. So you see where I'm getting with this is that, hey, this is going up very quick. That's nice. It looks good. It could look good for, 3-4 more days. Everything looks great and you feel like missing out. But remember, look, all this, if you were on the sidelines here and you felt like you were missing out, you felt pretty good down here because, hey, if you weren't trading, you're like, oh, I feel good now. So don't get sucked in too quick. Let the signals come to you is what I'm saying. Okay, let's look at Lucid. I actually do have a real live position on Lucid, a very tiny one that I took on right here, a very defined risk spread that I said, you know what, I'll take a shot on it because it was like one of those loved stocks like an AMC. So I put on a couple bucks kind of thing, a few little spreads for vertical spreads, nothing too crazy where I'm like, I'm okay if they fully expired dead. So this one, when I look at the technicals right here, we've got this stock support right at this $30 price level. It overshot it a little bit. And I think this one is done. Only because right here, you've got an ABCD pattern right now. So we're going to see if this comes back up. But I think it could actually reject. I mean, the volume is there. And like I said, I got a long position in it, like actual real money tied in for a long, but I think it's dead. I don't think anything's going to happen on it. But we'll see. Anything can happen because if this stock just gets a massive bump right there, then I'll be breaking even. But we're looking at, from a price perspective, I forget which spread I'm in. I'd have to double check. But let's say I'm in 24 more days out or like 17. They're expecting it to move about $6, right? So at most from here, I'll probably get into about the $36 price level, which is somewhere around here. So that's about where we're going to go. This stock sold off nasty right here. The volume's there. As it's pushing higher, the volume is weaker. It's lighter right there as it's moving up. So if it's pushing with lighter volume, you're more than likely going to get a rollover. That's just from a technical perspective. There's not enough energy, strength, or muscle to push it there. To keep pushing it higher. You'll want to see that more usually with more volume, but you're not getting it. So it's probably going to go here, maybe roll back. You could retest those levels, or even, just come here right now and just reject. So right now it's just weak. It doesn't have the energy to press higher. So I know it's one like, hey, it's tied into Tesla and all that, but to me, it doesn't matter. It's like a 4-letter symbol. That's all it is. It's just a matter of people are hopping into it, and doesn't matter what it is from a trading perspective. People get so attached to, oh, I love this stock. Oh my God, it's so beautiful. It's going to change the world. From a trading perspective, you're looking at distribution curves and probabilities and chance of success. Like, what's my chance that this is actually going to work out for this trade? That's really what you're looking at. So, okay. If you have any other tickers, let me know. I'm going to take a quick sip here, and then I'll go over and show you a couple more. Okay. So, okay, PayPal, also releasing kind of earnings here. It's kind of similar to Square. So you'll see a lot of these stocks there sold off quite a bit. So I think this will give you a really nice opportunity here in 2021. Not necessarily just February. I don't know what February has to bring, but I think, you're pulling back about 50% on a lot of these stocks. I don't think that, let's say 300 is kind of a great value. I think it's probably overvalued, but I also don't think that 150 is, I think that 150 is probably oversold a little bit from the short term. So I think the actual live true price is maybe around, let's say 200, 220, somewhere in between those ranges. So that's what I would look at. And that goes the same with like stuff like Netflix. We don't believe like 700 is a really great deal. But I also think maybe 350 is overblown. So the true price maybe should be around like 500. Obviously they can go below past that, but then maybe pull back a bit. So as you look into this, for like, the PayPal and Square, William asks, do you believe that Square will be affected by PayPal's bad earnings? Yeah, they usually tie a bit together because they piggyback off one another. It's similar like P&G versus Johnson & Johnson. They kind of go hand in hand. and they do work off of one another a bit. They're known as sympathy plays. Not always the case. You know, you got AMD and Intel. Sorry. Where's my Intel? There it is, Intel. They do kind of go hand in hand to some degree, but now, as you know, AMD versus the Intel chart is completely different. They have been disjointed, right? So at some point they were a little more jointed, then they got disjointed. So that can happen. So depending on what happens, then yeah, they can go hand in hand, but it's not always the case. I will tell you with earnings, what usually happens is like if the market is reading like if the market's trending higher, even if the earnings are bad, you can have a good uptick on it. If the market's trending down and the earnings, even if they're good or bad, you know, even if they're good, they can still trend down if the market's heading lower. So it kind of just goes with the market a bit. It's not necessarily the actual earnings, to be honest. You just look at studies and all that stuff's done. And you look at like the publicly traded reports, and you see over time that it's just kind of goes with the market feeling. It's like, oh, they got bad earnings. Okay, but they're going to do all this cool stuff later next year. So that's fine. We're not going to worry about it. So cool, buy it. So that's what they'll kind of do. So the same thing here. We'll see what happens and how this is going to trade. So PayPal earnings here. And stock plunges on weak earnings guidance. So we'll see how that plays out. And obviously with one day, what could happen is that, yeah, we've got a big plunge of 31 points. This is exactly kind of why I hedged my AMD position. I have no idea, but they could also power through, you know, a week or two later, similar to, a Netflix here that's kind of could give you a better opportunity, right? So if you're interested, and this is why I'm always cautious about earnings. So we'll be down at about 144, 145 on the open. So with PayPal, 144. So right around here, call it 150. Maybe we'll open it here, which is kind of near that area, a little bit below that level. And we'll see how that works out. But I think it still could be an opportunity. Ultimately, one of the good critical support levels, about 122. So, but usually they do go hand in hand. And I like these stocks, you know, Visa, MasterCard, they were, like you look at these, they kind of powered through this down move that they had, and they reported way earlier. So I know those stocks are different, MasterCard, but you can see they power through. They're not as fun-loving as a Square or PayPal, but they're kind of the old grandpa stocks in that industry. So we're powering here, you know, we got into lower levels and they'll snap back up. So I think similar thing could happen eventually, not necessarily right away. We had Groupon that was moving this week as well. If you were kind of into that one, I posted a quick video on it. But this stock overall is still trending lower. It could be more for a trade opportunity. I don't think anything's going to pan out. It's just overall still going down. And but from a trade opportunity right here, we are moving fairly well. I think, you know, you could get a little bit, let's say, higher, like it gets loved and then it sells off. So long term, you're still kind of moving down, but you could get a little pop into this level. So we'll see if that kind of plays out, because you've got this compression and trying to break, and we'll see. 20 is kind of critical support. Some of the other stuff, what was I watching? Carvana, also you're down quite a bit. Was it 66%? You know, cars are now much more in demand from a like an inventory perspective. Nobody's got vehicles, but that's kind of coming down to lower levels. And again, you're probably looking to, it's probably not going to be 400, but somewhere around a 220, 250 level is maybe more fair valued on something like this. Starbucks also had earnings. I didn't check it. You know, I was playing with the kids or had to go to the bus stop. So usually don't get to any of this earnings stuff till this evening, kind of like this, or in the morning, and checking all that stuff out. Here, and so Starbucks, you know, looking at 100, but let's see what it did, because like I said, I don't check it till Starbucks earnings. Starbucks to raise prices. Of course we're there to raise prices. Reduced hours are costing the company. Okay, yeah, whatever, it doesn't matter. I always say news. Okay, cool. That's the headline. Doesn't matter. Stock, Starbucks. It's just to get an idea. We're down 83 cents. Big whoop. Okay, so they're down $1. So nothing there. So you see how I look at these. It's like, oh, okay, big deal. So they're down. They're going to be around, let's say 98. So we're still creating that rounding pattern right here. So it could be a buying opportunity. Maybe 107, 8 could be where you get to see some issues. 105. So I haven't nibbled on this yet, but it's something I'm looking at. You know, Starbucks has done pretty well. I don't think it's a massive panic yet. Like this was a massive panic. This is like a pullback, but it's not a massive panic. So the concern here for me is Starbucks goes here and then we reject, creating a B, C, D pattern. Because with higher prices of coffee, that kind of thing, people may start to try and say, hey, I don't got any money, so I'm not going to go and buy a Starbucks. So they'll go here and reject, and now all of a sudden they're trying to save some cash. On the other hand, they say, I got to have my coffee. But who knows? From a trading perspective, that is what concerns me a little bit, is if we go down, for now, for the short term, could be fine. But once we get into about 110, I'd probably actually look to short it, because I need to have some short positions. So always when you look at building out a portfolio, you do want to have a mix. It's nice to have a mix. And I like building out some short positions with some long positions in case of downside moves, just like we've had. Okay, William asks, how do you see Apple? I got in on a call today. Yeah. Okay, so calls are expensive right now still, I think. So if you're buying single options, I'm not sure if you're doing singles. Usually I look at it as a little stretched for the short term, right? So we got oversold and now we're almost getting to the overbought area. I bought into it as well, like over here earlier as we were starting to power higher. I was nibbling on things before. So I do have some live positions on it, some vertical spreads, but some of them are also hedged. So I'm spreading my position out in different areas. I think you got some issues around 180. You've got some issues around right now about that 175 price level. Not to say that you can't power higher, but is it kind of like a massive opportunity? I'd say, I'd probably nibble a little bit more rather than going really, really powerful, like, hey, buy the stock. I'd be more of a nibbler, and I'd look for nibbling more on pullbacks, but I wouldn't be a chasing kind of this, because we're getting into those upper band price levels, like 175. Again, could be a little bit of trouble. So I'd just be a little bit more careful, only because, I mean, it's been doing well. It's a good stock. I hate their products. I don't care for Apple products. I'm more of an Android person, but that's okay. A lot of people love it. From a stock perspective, I enjoy their stock. And, the 160 is a good support level. So if it comes back, starts coming back then I'd start looking to nibble again. And I'm looking again for longer term nibbles. And that's why, I was trying to nibble more here, in this price level. And right now I'm kind of like, hey, let me wait a little bit for a red day. I don't want to over nibble too quickly, because again, we're getting stretched, and I wonder if we're going to get a pullback for a retest, right? The overall trend here with this red line is kind of going, like if I could project, we're kind of going at this level. So it's possible here. If you look at kind of Keltner channels and bands, like this gives you ranges on kind of what the average is. And if you look at this here, we're actually a little bit getting into this upper range. It could still go in this channel right here, but it's not like we're moving to the upside like this. We're actually kind of, you can see, moving kind of more sideways recently. We've got oversold here, and now it's not that we're totally overbought, but the stock in general just isn't like super strong. It's just because it's made a big move earlier. Like this was a nice move to the upside. So now we're due. We made this up move. Now we're making some sideways action, really. So you could buy on dips, that kind of thing. But I'd be careful, like, at 175 here, and this, once it kind of breaks this, starts moving up, or any pullbacks, I would add. That's me personally. Like on pullbacks, I would add for the longer term. So I think it's a good stock in general. I'd just be careful short term, temporarily, a little bit of a issue for me. Okay, let's see, where were we at? Let's check out Etsy. Was another one. hot stock at one day, now less of a hot stock. So we've had a pullback on Etsy. You can see it's been trending down, 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 down. So we're down 54%, kind of right now about 49%. And we've got earnings on 224. So if you're stuck in this one, tough area right now. So 140 is kind of building some support. Would I start adding or doubling into my position right now? No. I would kind of wait for this to kind of start creating something like that before adding, but it's starting to look like it's building a little bit of a base here at about 140. Okay, so it was up 80 at close, so maybe take profits in the AM. Yeah, I mean, again, depending on the with any stock that I talk about, it depends. You got to always look at it. Are you a shorter term trade? Are you on it for a longer term trade? If you're in it for a shorter term trade, it's completely different than a longer term investment, right? So you definitely have to take that into account. What if it's shorter or longer term for you? Maybe medium term. So you definitely have to watch that. Okay, Tesla. Let me finish up Etsy here, and then we'll do Tesla for Jeff. Okay, so Etsy, if we look at this one, I gotta tell you, I hate trading Etsy. Oh my goodness. From a bid-ask spread perspective, it's really annoying and a pain. It takes me like, I'd say 6 hours to maybe 40 hours to get a good fill. Like, honestly, like it takes a while. Otherwise, you get ripped off on it. On Etsy, it's just not as liquid. It looks like it's nicely traded here from a volume perspective, but when you get to the options, it's really a pain. So if you're trading options on Etsy, these bid-ask spreads, just look at this junk. You've got $8 to a $10 spread. Now, part of that's the market as well, or you got the 11 to the 12.30 spread. It's really a pain. And here you got a $10 to $12 spread. It's a $2 wide. Oh my God, $2 on a bid-ask spread. So you're losing a bunch of money right off the bat, unless you can get a good fill. So sometimes you get really good fills, but other times you got to be really patient. But from a price perspective, when you look at this one, you're kind of getting into that possible area right here. This stock's a bit toppy at the 3. You can see it got sucked right into the 300. So maybe a little higher here soon, but it's still overall the trend is, you got kind of this trend where it's hasn't even broken it yet. So we're going to see what happens. So don't rush in to add or kind of buy the dip yet, on some of these. Okay. Tesla here. I got a couple of levels I'm watching on Tesla. For me, I'd be nibbling to short it, to be honest with you, for now. Just the market is weak. We are under some of these lines. We've got a lot of sideways action here. So I know it's loved. You have to, if you trade Tesla, you have to be on top of your game because it's a heavily shorted stock. There's a lot of big players in it. It's also used as let's say leader in the space, like all these other stocks like NEO and Lucid. It's kind of used as a leader for that. So when you watch this stock, you need to be very careful what trade you do in this because it will whip you around. I kind of look at also this trend channels where I see a lot of channels and moving averages. I got a lot of mess right now in Tesla, so I wouldn't even go long or short too much on this. But it's more of, if this stock does power higher a bit more, I wouldn't hesitate to kind of pull the trigger on a short, but I'd rather do it at like a 1200 or like when you get a big move up like this. Like right now we're starting and we're right at resistance, but just because I see resistance, I don't think of it as being overbought for an opportunity short. It's kind of like the condition is there, but it doesn't mean it's a trigger, right? There's two different things. Conditions versus triggers. Just because something's overbought doesn't mean it's a trigger to short it. So I would rather wait for further upside to short it or a bigger bar to the upside to short it. Other than that, if you kind of were looking to buy the dip for the longer term, I think for the longer term, you still could be okay. But the time to do that was more, when they have panic bars like this. So you got to be, Tesla is just, it's an alligator, to work with and wrestle. It's kind of like Amazon as well. Like these things are like alligators to wrestle with. Like you got to be way on top of your game and it can whip you around very quickly. So make sure you trade lighter on these kinds of stocks, you know, simple contracts, spread them all over the place, you know, like 700, 800, you know, other spreads at different price points on different days. So anyway, it's still a mess, right? We've had this market that looks like it's going higher. I would be careful choosing any one way or the other. It's just like 2-3 days. I wouldn't say it's a full trend. We're still digesting out of the mess. So the same thing with this Tesla. We've had this mess sideways. We're trying to get out of it, holding some critical support at 800. So I think 800 is a good value, like value buy from a medium, shorter term perspective. You know, you've got some resistance levels. So I'm watching kind of these couple of levels where the stock changed direction. And then 1200 is kind of, I think, going to be, again, a slightly overbought area where that stock could chop around here for a whole year. Who knows? Could be 2 years. Could go there for a while. And you saw like what happened with Amazon. Like look at this Amazon stock. Like people loved Amazon for years, right? But you had sideways action for almost a whole year. And it could very well happen to something like Tesla as well. And then it could power higher after that. Who knows? But for now, I'm just cautious. Okay, let's go into Pinterest. It's another loved one. And similar to like Etsy and that kind of stuff. You got earnings. It says 2-3. Those are not always right. I got to go to pins over here or on this side and see when earnings are. Because my panel, not always 100%. The other panel goes from Zach. So pins, by now they should be right. Yeah, 2-3. I've got earnings. So this stock is also very much loved to trade. People like it. As I look into Pinterest to buy the dip, like, look, I'd wait for earnings. Got to wait for these earnings. Because otherwise you get blown like PayPal or you get a pop like AMD, so you don't know. Right now, it looks favorable, man. This stock, right? You think, oh my God, you're kind of nibbling at the bits of like, oh, it was 90, 80. It's a cheaper stock. It's not as expensive. You're kind of nibbling at it right now. You're thinking, but I would hold off. You got to wait. You cannot pull the trigger unless you put an earnings trade. And you can see we did a gap fill right here. Very easy. Gap fill, came right back into, I got burned in this one. I don't remember, somewhere around over here. I tried to take a nibble. And then here it's coming back again. It's not ready. Now I'm like, okay, I took a shot earlier. Now I'm waiting for my next shot. My next shot is, how am I going to take my shot? I'm not even nibbling on it long. I got to wait for earnings first. That's first. Step one, wait for earnings. Okay, step two, what's the next part to wait for? Wait for some volume maybe to come in, or an oversold action, or maybe like a turnaround like this, or if we power higher, wait for the pullback there. So those are a couple of choices, opportunities that you might want to watch for. Also, if you're waiting for kind of like a descending trend line level right here, wait for this to break, come back there if that's possible. Then you're looking to kind of get into maybe the stock. That's what I would look at. Okay. I don't think it's going to zero. I also don't think it's like as powerful. You also got Twitter, similar concept. On some of these, you've got weaker volume right here. Look at all this selling pressure. This stock is down for a while. You could easily see this come over here and then chop around and pull back. So be careful here. Nvidia. Okay. I do have some long stuff, actual stuff on Nvidia on my positions. We got earnings a little bit later, 216. It came back. This one whips around a little bit. We've got a couple of swing points here coming back. Okay, I think we will get a rejection soon to some level. I don't know. Volume is weak. You've got more selling pressure than upward pressure. I think we just got oversold short term here. Okay, and then I believe we'll pull back somewhat. Now, once we get here, there's the big decision. Are we powering to the upside or downside? No one knows. But this is where the problem could lie, is if we got a nasty bearish market. This is how bearish markets are formed. They suck you in, they look good for a while, and you start pulling back, and that's where you get an A to B, B to C, C to D pattern downside. If you're still going to try to hold it, then it'll work the other way. And you're going to see this come here, pull back maybe, and it could power through. It could even power back here and go that way. So if it crosses, but you'll want to see more buyers. Like you need to see buyers coming in If it's weak, it could move higher, but it's not sustainable. It's not real. Like, is it moving up? Yeah, but it's not real. It looks good. The price is moving, but it's not real. But they're doing this cool widget thing, and they got these, you know, data mining, and like people are buying graphics cards, but it's not real. The move's not real. If the move's not real, you got to be careful. So, and that applies to every stock. So here we've got this one, Nvidia. We got light volume, and yes, I'm in it live in a real account, but it concerns me from that perspective, right? So if more comes in and it pushes through and all that, hey, great. But it's one I'd be cautious about. Amen. Okay, this one looked good earlier. I was talking about this one back here. Nice breakthrough, because we had a good consolidation and compression here. Usually triangle patterns are continuation patterns. So just a quick chart idea here for you, or I guess not trading idea, but a chart idea for you. If we have two types of patterns, you have a continuation pattern. That's kind of number one. And number two, you have reversal patterns, right? So stocks can reverse. And in this case, usually boom, and you continue, okay? And that's kind of what we did. But when you look at it right here, we continued, but we started to fail. But that doesn't mean it can't continue a little bit later. But here's a little bit of the issue with AMAT. There's a few things in here that's a little messy, and I'll try to simplify it here. Number one, you've got this 160 resistance. Number two, as you watch this is I forget the exact word or terminology. When I used to do a lot more Encyclopedia of Charts by Bowski, the book. If you read it, it's like this thick. I'll have to pull it out off my drawer for you guys. Check that out. But this is like it's called inner trend line, where now this, we came from support, now it's became resistance, and then right here, and this could reject. So that's a bit of a concern right there. You still have selling pressure here on the volume. That's bearish, okay? And that's a bit of the issue. From I know I'm drawing a lot of lines. Here, yeah, the 130, this level, 125, here's a bit of support. But there's a couple of ways to kind of look at it. Earnings 217, so watch out. I'd be careful. Earnings are around the corner. I wouldn't put on any trade like that with 2 weeks to go. Be careful. And you've got a market that's shaky at best right now. Give it time to set up, and then you can go from there. So here, we'll see if it rejects. You've got this trend line, also resistance. So you've got resistance number one, R1. You got R2. Okay, you got support one over here. A lot of crazy stuff on the charts. Let me show you that Encyclopedia Charts. Glopedia of Charts by Bowski. There it is, Thomas Bowski. It's about $120 or so. They're hardback, so it's huge book. You could check it out. Boom, hardcover. Even the Kindle's $100. So I got it, and it's I think I got the second edition, not this one. I got a green one, but I'm sure this one's just as good, and it's huge. Like, that book is thick. There's only a handful of, like, there you go. You want some fun reading material? 1,312 pages for you guys. So it's not a ton of books I recommend, but yeah, something like that if you really want to get that. It's dry, right? It's dry material, but it's kind of like a good handbook. Like, more power to them for doing a book that big. I know, because I've written books and I know how much effort they take. Okay, Microsoft. Okay, Microsoft, I'm watching this price level right here where we could reject right now, 310. This overall is just moving sideways to me right now. We're right here in a sideways area. Buying the dip, maybe, kind of thing to watch out for, but I wouldn't be there yet. We've got rejection at around 340. This 3.8, 310 level, that's a bit of a concern right now. If we break through that, I think it's good, but then we'll be in the sideways pattern. So that's what I would watch, is that if we break it, and go into this. Now we're in a sideways pattern. And the question now is this, are we toppy from a market perspective? That's a question. But for now, I'd have to wait. I think we will get some kind of rejection here soon for a little bit. Even if it's like a pullback to a 300 and then maybe break, you know, we got oversold. I can see it, but now what's going to happen here? I'd wait from let me see if it gets into this from a sideways now. But you won't see, like I would look at, there's a couple things you could look at. You could look at, let me buy some really strong stocks, and this is strong, and then thinking it can hold up if the market pulls back further. And on the other hand, you could say, let me buy stocks that are already cheap or way cheaper, like stuff like PayPal that's being tanked here probably after earnings. Or other stuff like, I don't know, like Pinterest. Like you can start nibbling. There's DKNG that's popular as well. They're starting to see some light, right? At this like $20 price level. You can start looking at things like this and saying, hey, they're oversold. So I'd have a mix of these kinds of things. If you have a few that are oversold, but then also maybe a few that are maybe strong, like an AMD. I wouldn't do AMD and Nvidia. They're kind of really too close. You know, AMD, Nvidia, Apple, they're all very closely tied in the tech sector. You know, split some stuff up, like something weird, like a Caterpillar or an XHB home builders, or something like, you know, silly, or like a TLT, something, you know, again, do stupid stuff in a weird way. I'm telling you to do something different. Don't get everything all in one area, because what I've seen people's portfolios when I do coaching sessions, like I'll see stuff like, okay, I got an Amazon, I got an Nvidia, I got an AMD, I got an Apple, and you know, they might even do like an Intel or something. I got AMD and Intel, but it's all too tightly correlated. So make sure you split your stuff up all over the place, like a Caterpillar or a Deere, you know, and then you got some other weird stuff like a Johnson & Johnson, and then you got some weird bank thing like a Bank of, like, you know, again, just spread your money in weird stuff, like different stuff, different strategies at different points, spread it around. So anyway, so Microsoft seems pretty strong. I just look at right here, that level right now. I wouldn't jump the gun. It could easily have a slight pullback. If we get a retest on the overall markets, this can easily come back to the 290. But if we break into this above it, now you're back into a sideways pattern. So again, it's not that it'll probably power higher, like maybe a PayPal could power higher, or a Pinterest could power higher. This one would probably just go more sideways. It could power higher to 340, but then it could, you know, do the sideways thing going on. Okay. Let's see, on semiconductor here, we came back to the gap. So the gap held right here. If you look at 51, let me look at this longer term chart on. I haven't seen it. So sometimes I like to, if stock I'm not familiar with, I always do this. I always go longer term, medium term, shorter term. So this one I'm less familiar with. So I always got to take it back. So I look at, okay, so this stock, you can see it's trending higher. Just give you a quick insight. Trending higher. We've got kind of this nice break at this level. Nice breakout. Looks good there. Volume's picking up some speed here. You know, you got this volume pattern there. And let's go back into now weekly. So let me draw that chart time frame here. I'll just draw this time. Okay, so there it is. So I could see it. Okay, so stock looks overall, you know, from a medium and longer term looks okay. Then we'll look at kind of more like a 2-day, 3-day, and we can see what's going on here. Okay, so now overall we've been doing okay. We've been doing kind of like a little stair step kind of pattern. We got a gap right here recently, coming back in there with volume picking up some speed. So this is good. This is healthy. Earnings, it says 2.7. Double check that. I'd watch out for that. We've got a toppy area in here that got into about 70, and now we've pulled back. How far off the highs are we? So I'll check that. That'll be about 15-16%. So 70 is going to be a bit of a problem. Okay, watch that. So there's your resistance. There's one level. You've got support right here at around, I believe, 51 or so. There's the gap at this zone. So for now, it's holding up okay. Here is your R resistance as well. So let's just call that R1. This is R2. So you're right at 60. You're right at a possible resistance. If the market rolls over, Granted, I believe, again, as a side note, I believe this stock's doing fairly strong because of the volume, and it didn't fill the gap. So no gap fill is usually a strong stock. But if the market does behave weak, this could roll through and fill the gap because there's an empty space, which means it's weakness. It's like having holes in your floor from a second floor to the first floor. If you got holes in it, you could fall through. So we could pull through down here, and it's possible. But I will say, from my perspective, seeing it, it seems like a fairly strong stock, and I think it's possible that it could go here. From a technical aspect, though, you're right at resistance right now, and you know, but it's acting strong. It's behaving strong. It's breathing strong, right? If we're running, it's a stock that's behaving strong. If we're kind of looking at it from a possible technical perspective, you have to kind of be a little less biased on that, and it's possible we reject here, and then we'll see if we can power back up there. 70 is another level over here that you got to watch out for. So we'll see. But, you know, be careful. Like, I wouldn't go long right away right now because you're right at resistance, unless you're aggressive. The time to go long right now is if you're aggressive. If you're more cautious, you wait for the break. If you're aggressive, you're okay to kind of get in a little bit earlier. So there's two gaps. Yeah, but the critical one right here, from the recent support right here. There's always like minor gaps all over the place all the time. So, but that's one of the critical ones. If you're talking about this gap over here, this gap already is kind of gone. When the price gets too far extended and you got the next one, you've got, you know, I see what you're saying, but that one's a bit gone for now. So we'll see if this one gets filled right here, and now we get into this level, then yeah, this one could apply a little more in that case. Okay, gapped up the last two earnings. Yeah, I mean, yeah, they can do that. So, and it's usually like also on acquiring, like the few times that gaps don't get filled is kind of the acquisition stuff. This is when the gaps sometimes do not get filled. So when you look at ATVI, this is the time when I actually see gaps don't get filled sometimes. Oftentimes they do get filled, but sometimes they don't when you see a company getting acquired. Okay. How long we've been at this now? Let's see. 57 minutes. Thanks for joining me. The late night party hour. Okay, let's see what else we've got. I got a couple more and then we'll probably call it a night. Let's look at like some other boring stuff. Here's Home Depot. Okay, if we look at Home Depot, same, you know, this stock's been trending really well. Got top out at about 420. You're coming in right here. I'm nibbling at the bits to maybe short it. I'll tell you why. You probably say, oh, Home Depot's doing really well. Yeah, I mean, look, I love Home Depot from a buying perspective. I love it, right? Lowe's, Home Depot, they're great. You know, they help a lot of people out. Just try and go get yourself a sink or tile or anything like that. Or like, you know, where else can you find like all this cool stuff from a guy's perspective? It's Home Depot. But from a stock perspective, you got low volume coming up. The stock has been loved way too much. And I think that love's gonna fade on Valentine's Day. So it's time to kind of, you know, nobody's buying power tools on Valentine's Day. I don't know, maybe some. Some people do. I know my wife wouldn't want a power tool for Valentine's Day. But anyway, if we see this going here, like look, as this powers higher, I would look to short it, honestly, because you got low volume. The stock was way overextended. My concern, again, what do you know? Earnings, right? Earnings are around the corner, so be very careful, and that's a bit of a concern. If this gets into here as a sweet spot and just kind of hangs around here at earnings, I would short it. You know, I'd take a nibble on the short, because then we get into an A to B, B to C, C to D price pattern. We got volume that's bearish building. We're trying to go up on lighter volume. It's a shorting opportunity for me. So again, this is how you diversify your portfolio, not only longs, but shorts. Exxon Mobil, yeah, this baby's running, man. I talked to a couple years back. I talked to a couple that put what was it? A lot of their money in Exxon Mobil. They probably aren't watching right now. I hope not. And they lost. I think they went from like a $1.3 million account, like their broker, right, who knows everything. They told them to put like 90% of their money on like Exxon Mobil, and like, you know, I forget if it was like they did it in 2009 or here, but again, all their money, all their retirement, and they lost a boatload of it, and you know, it got cut. Their portfolio got cut quite a bit. So anyway. So be careful putting all your money into one basket, but it just reminds me of stories like that when I see certain stocks. So Exxon Mobil, like the volume is there, like everything looks good on this stock. Like I'll tell you, I've shorted the XLE and I'm getting burned on it. So this is like energy, like I shorted like over here. It was looking okay. I was looking, oh, it's looking good. And then again, it's going up, and it's still going up. So, but I still got like, I think 25, 30 days in it left. We'll see. But Exxon Mobil continues to power higher. What does that mean? More money for gas prices, right? Good for stocks, bad for consumers. So you pay more at the pump. This stock looks good. It looks good. It looks healthy. A lot of good movement. Would I buy it now? No. It's extended for me. From my perspective, the time to buy it would have been like here. I think it's stretched. Buying on dips, kind of like an Apple type of thing. You can buy on dips, that kind of stuff. But you know what happens? Like, right? These things go, like, look at Home Depot. These things, you know, they can power higher for a long time, go sideways, power more, go sideways, and then you rip it. So be careful. It's not to say you can't keep going. Like, this thing could easily go much higher. You know, we can get into much higher prices, but you've got a toppy level at about 100. You know, about 100, like this stock, 95, 96. You're getting kind of in that zone, but look at where we came from. Imagine just the other year you were at 30 and you bought into the stock. You're now at 80. I wouldn't go long on it. You know, my kind of thing, risk to reward, I'm like, you know, it's the talk of the town, all that stuff, but it's not when I risk to reward, I'd be a little more careful about. I wouldn't chase. I'm not a chaser like that. So I'd say kind of around that 100, like 95 could be resistance. That's a little bit of a toppy level. And I think, you know, from a trading perspective, you're like, man, it's stretched. I'd look to short it. But again, over bought or high prices does not mean it's a trigger to short the stock. This, if I took like a 50-50 at the money strategy, for those of you that know what I'm talking about, it's an opportunity right there. Like, you could do it. I'm just cautious because, well, we just had earnings. Now you could reevaluate. Now you got to wait 3 to 5 days to see how that behaves. You know, give it 3 to 5 days, and then you could maybe say, okay, I'll take a shot. But if beyond that, I'd be careful. The stock is a little stretched. I wouldn't necessarily go long, but it could. If you're going long, you wait for pullbacks. You don't go long on these big up days. That's more aggressive, and you know, I think you're asking for it. Be careful. Costco. I loved Costco. I traded it all during this move. Hate shopping there. Man, everybody goes to Costco. It's so busy. Imagine trying to take the kids. I want to go look at this. I want to go look at that. Oh, no, I want to go here. And then I don't know if you've been to Costco where they have I don't know if in every Costco is the same. I've only been to a couple, but they have the freezer section. And then my kids are going to break their neck on it or something, because they have these like platforms, right? The doors are so wide and huge, and they have this ledge so that all the kids, like, you watch all the kids are like climbing on these things like jungle gyms, and they're walking on it, and like they're trying to walk, and then you got all these people trying to open the doors to get the groceries, but the kids are like walking on it. You know, I don't know, my kids do that, and then, you know, I feel bad for, you know, and then you see other kids doing it. I'm like, Costco, just make flat wall, not like a ledge, and then the door's in there. It's like, I don't know, maybe it's just the way their design is. Anyway, I don't know where I was going with that, but just fun story, our Costco experience. You got to buy like 20 croissants, and then you eat them all week. because you feel bad throwing them out. So I don't shop there that often. I mean, just my kids don't eat much. They're young. Okay, so 480 kind of looks like a support for your possible turnaround. I do have concern on Costco from an ABCD structure perspective. So this looks good. Let me just look at one thing here. So you can see right now, the stock is breaking this couple moving average. You're breaking a nice area of the 500. You know, it's coming into this red line that's starting to break right here, which is also good. So that looks fairly nice. The earnings are always later in Costco, so you got 3-3, so you got a bit of time. But my concern, we did finish this right here. A to B, B to C, C to D. So that price pattern has completed. When you have a completed price move, then in that case, something new happens, and that's what we're getting here. Now the question is, are we going to do, let's change it to pink, are we going to go here, kind of here to here? Because we do have lighter volume right now, and you've got more selling volume here. So we're going up lighter, but from a longer perspective, it's not bad to nibble. Like I wouldn't say you're too early. My concern is a little bit of the earnings, and I do need to be careful that we could get that selling pressure. So maybe I'd buy some extra protection for now. Maybe put on something like a tiny bullish calendar, or, you know, like you hedge it off a little bit. That's the way I would play it personally. Only because I'd be concerned with getting in too early on something like this, where now we go up a little bit and then we sell off. That's kind of my concern here, because we were toppy and this stock didn't pull back a ton like some of the other ones, right? This stock's been doing well. It's holding up okay. It didn't pull back nasty because it's an outlier, right? This is what we're talking about. You got Costco versus like AMD versus Nvidia, you know, versus like Apple. So this one is kind of like something different, right? It's like a Walmart. It's like somewhere out of that big group of stocks. So I do like it from that area where it's different. And here overall, you got a nice rounding pattern. This is good. 480, good support. Not a lot of volume yet. So if you're nibbling on it, it's fine. Just understand you don't have a lot of volume. So yeah, you could say it's kind of like a nibbling opportunity. Earnings are still a little farther away. So if you're looking to do it for the long term, that I'd say, okay, fair. Just watch out for some of these resistance levels here that we've had in the past. Okay, so here we've got 515. 515 about is your resistance level that we're going to come into here soon. And then, of course, the toppy level about 570. So I don't know where I stand. I traded it a lot in this time frame. Now I'm cautiously nibbling on different things, but I do like it from a overall perspective, longer term and so on. Earnings are still looks like it might be starting a cup and handle maybe. Message retracted. Okay, yeah. So yeah, you have to wait for earnings. For if you're like trying to put a brand new position, if you're dealing with 10 contracts, you could do like 1 or 2 before earnings, but you got to be very careful. Earnings, the only time you run through earnings, if like, hey, I'm good with that stock for 1 to 3 years, that's when you leave it going through earnings. You know, if you definitely are going to have that stock 1 to 3 years, you could run it through earnings. And then what you do is like, let's say you're selling a vertical put on earnings and it blows through it. Then what you would do is you buy this back at a loss, and then you go in and you get a new one over here because you're like, I'm investing in this stock for the long run. So then you're over here now. Okay, so this is your like risk array where now you're at a lower price or level. And then if that keeps going down, just like a long investor, you're still holding on. You just reset your deltas and you go to the next one. So now you've got this stock. Let's say this was at 300. This is at like 250, and now you're at 200. Eventually you're looking for that stock to turn around, and now the 200's good, and you sell more vertical puts again at 250. So now this is a winner, that's a winner, that's a winner. But at first you had a loser, and then a winner, winner, and now you're kind of back and you're doing the same stocks. That's kind of what the long investor, except from an options perspective, you do it that way. From a stock perspective, you just hold on to the stock and you don't have to deal with it or worry about it. Okay? All right. Big Blue, IBM, XLF, let's see. T-Doc, this is another one that's pretty popular. I traded it before, like over here, nothing crazy. But this one again, Cathie Wood stocks. You got a lot of bearish volume, not looking good. Medical doctors, I don't know, you know. We'll see. Virtual stuff, yeah, it could be the future, but I think people right now want to see their doctor. So you got some support right here, 73. It's early, right? Think of this like, hey, I'm ready to run a marathon, and I'm getting my water bottle ready. So that's kind of what I'm looking for. So I'm getting my water bottle, and I'm not ready to run that race, you know. So that's kind of one of those right now, similar to a lot of the other like PayPal stocks. Just wait for kind of a one way to do that is to look at a moving average crossover. I've got a couple moving averages. This one is a 10 day, okay, and a 21 day, and wait till this crosses that one, okay. And the reason you do that is because when you wait for just the 8 moving average or 10, you can see it crossed a few times here, and those are kind of fake out signals. So you could wait for a deeper confirmation where I could say, hey man, I'm ready to go long, right? It looks good, but the signal's not fully there. Like it's like there, it's teasing you, but it's not fully there. And then again, oh, I'm ready, it's gonna bounce at my support, but it's not there. So that's where you kind of like wait, be patient, allow that to cross, and that's kind of might be a better area. So coming back just to show you, like, you know, when these lines are kind of more stacked on a couple moving averages, you know, that's when you start looking at maybe getting into the stock, something like that, where it's a tighter area. There, let's look at another one right here. They're like tighter, but they're kind of moving right here, starting to go from a tight to a more spread area. Then you could say, okay, that looks a little better after a sell-off, right? So you got this, after a sell-off, it looks good. And then, but you're waiting for that compression to kind of open up a bit, right? Till you see that starting to open, which it's starting to kind of open up there. Anyway, that applies to pretty much every stock. So that's where right now, hey, it's starting to come in a little bit, but it's not fully there yet. You know, be patient. Okay, STX. Oh yeah, Western Digital and STX, Seagate. I got a lot of Seagate hard drives. I think to run all this stuff, I got 2 servers, 8 hard drives in each, 14 terabytes in each one. So I think I'm running like 48 or 60 terabytes with some redundancies. So I got like, I don't remember, like 20, 30 hard drives just between Seagate and Western Digital, like tons of terabyte of data for all the video stuff I do for you guys. But anyway, let's go in here. Seagate and Western Digital, they're a little more stable. I like them from being an outlier, but they're still kind of tech. If you look at these right here, you had a nice support at around 60. Okay, about $60 for a couple terabytes for a hard drive, by the way. Nice breakout here. Okay, good breakout. Stock went well. I think you're getting into a little bit of toppy area at that level, obviously. Okay. I think, you know, you're a little stretched for a buying now. Wait for a dip because you got good volume. So this looks good. This is good. But you got to wait a little for a pullback. You got a gap here. Okay. If you buy now, you're chasing. That would be my thought. But overall, it looks fine, good, healthy. But don't chase. That's a little bit of the problem that we get caught in as a short. Yeah, you could do it, but I would wait. I would wait for a little more of a bounce. It's not like the short time would have been like here. That's the short. Like if you were shorting Jeff, this was the short. You're coming in. That was a huge move, single day move, past the expected move probably. Now I'd probably wait for another big bar up or try to get into this level, and that's when I would look to short because the volume's still there. It's stretched, but it's not maybe stretched enough. You're going to need to stretch it a little more, just like the overall market. And you'll see like the overall market might even stretch more. Like you might have a little pullback here and might stretch a little more. And then, you know, so the same thing here. Seagate for a short, I'd wait. I'd wait for a big bar, right? You want to short on these big bars, like those big bars. That's when you short. And when you buy, like, you know, you buy on a big down bar kind of thing. So the same thing here. Like I think it's kind of a little bit early to short because you're consolidating now. You could do it. You got a gap here, but I think it's a little aggressive. Watch the pricing and watch the price range that you can get on it. So let's say we're doing Seagate on maybe a, let's say 45 day. It's a $5 wide spread on a 45. Let's look at the other ones. Is there a dollar wide? Yeah, here's a dollar wide spreads. So now I'd look for, it's much more favorable in that way. And then 107. Yeah, sorry. Why am I on a, let's see. There we go. 107, 95 cents. Actually, not a bad deal. From a price yeah, it's the way to go. Like, the deal is good, I'll say, from a pricing perspective. From a chart perspective, I think it's kind of, you know, so-so. But from a pricing perspective, like, price always dominates the charts. Like, right, if you have probabilities and you have price, if you're getting a good deal, like, man, it's a good deal. Because if I look at the other side of the trade, I'm going to do the call side, and we'll see where they're pricing it here. Let's go to 107, 109. Like, where are they pricing it? Like a buck? Why am I doing it like that? 107, 109. Yeah, you're paying up a little bit. Like you look at the spreads, they're pretty good. You're paying up a little bit, and it also depends on actually, like you can see it's $1.796. So it is actually a little bit more to 10. It's almost exactly in the middle, right? You're almost at 108. So you're right in between 107 and 109, but you're paying, like, you'll see these tighten up probably tomorrow if it's close, but you are paying a little bit more. But if you can get it like at 95 cents, the put side's favorable, but they're actually trading very tight on the spread. So you could almost do either one, but the put side is slightly favorable from a pricing perspective. So that's actually very good from a pricing perspective. Chart wise, I'd say maybe that's a personal decision. Pricing, I'd say it's a good price. You know, like blueberries getting it like 15% off kind of thing. So, Daku, I hate trading Daku. Bid-ask spreads always burned me. I don't know. I think it's early on a Daku. Buying the dip again. Here's the thing with Daku. You got earnings on 310. The stock, I know from a live account, trading live real money on this, it's tough bid-ask spreads. You got to be on top of your game to trade this one a little bit because the spreads are wider and it's not as liquid. It's kind of like an Etsy type of thing. So usually you'll get burned if you're like quick on it and you're not patient. 110 appears to be support, but you got weak volume. This thing gapped down. Can this stock power higher, get into this level at 150? Sure. Can it go through and fill that gap above? Sure. But you're going up on lighter volume. It's like, hey, you know, we're in the car, ready, we're driving, but where are we going? You know, going to Florida. Okay, well, why are we going north? Well, I don't know. Well, that's the same thing here. It's kind of like, yeah, we're moving, but we don't have the volume. We're not, you know, there's not enough juice or power. Or it's like, you know, filling up your car with, I don't know, corn oil or something. It's like, it might work, but it's not the right thing. So we're moving, but it's not the right thing. It's like you want to see more volume coming in. You're pressing, but it's, you know, from an overbought perspective, it's still like, you know, it's choppy. There's not a lot of critical technicals here either. So it's a little more messy. Like you could draw something at 100 because that's a psychological support. But there's not a lot of like price behavior like there is right over here. So it's tough to draw that. You could say it could be rounding, but it's not there yet. You got a big gap, but again, there's not a lot of data. And when you look at this from from this volume, the volume is not there yet for power higher. It's only 3 days. I'd wait. The rest of it, like here's another quick check. Like if you're confused, like if you're ever like confused, like I just don't know. I don't know, but I want this one. I don't know, but I want it. I get it. I was at that point too. Something like I want it. And here's the way you do it. Here's simple. Go to the weekly. Do you have more red bars or green bars here? And it's kind of like, you know what? I got more red bars kind of than green bars. You also check a look at the monthly now. Okay, are we doing a lot of red recently or green? We're selling off. You got a red bar, you got a red bar. That month is not even green yet. It's starting, and we're starting the next new month. It could be. Do you buy on dips? Yeah, you do, but you got problems. And it's kind of like, recently we got problems. So again, red bar, red bar. It's kind of the same thing you look at like, this my typing skills suck. Okay, you look at this like Lucid. You know, you look at the same thing like or AMC. You say, okay, do we have more? And you can take it on the weekly or monthly. Like the last few months, if you're super bullish on this, you got red, 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 green. Are we bullish or bearish? Red candle, green candle, monthly. Simple technical analysis for you. This is, I call it the dummy technical analysis. You could do it. I do it all the time. It's just use whatever you got. And I got it. I got red and I got green. I can see the colors. If you're colorblind, my son's colorblind, and some reds and greens, then change the color. Okay, RIVN. Okay, this goes with those automotive stocks. It's more speculative, obviously, right? You're in that fuel cells type of stuff, and all that. Could I buy a little nibble here or there? Yeah, it's one of those that I could nibble on, but it's kind of early. Like, do you want to? Where does it fit in? IPO is right there. Overall, you're trending down. It's kind of like reminds me of this, like let's say Hood. Like you'll get some pops sometimes, like over here, maybe over here, and this, you know, it reminds me a little bit of Spotify back in the day, where, you know, this thing's going down, and then maybe like, look, it's going down, it's kind of trying to pop, going down, trying to pop, maybe eventually, but you got like a lot of choppiness here. So when I look at this, it's the same thing. Like it's kind of early here. So we could start popping, but it's early, right? The huge volume's not coming in yet. I would wait for pullback, like see what this comes out. Like if you're starting to nibble on a longer term, maybe, but earnings are coming up. You know, trend wise, you're not fully there on the break yet either. So maybe, but not yet. I think it'd be aggressive to go now, or earlier. That's okay, but it's only 3 days. Again, if we do a simple little test, let's go to weekly. We've been red, 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 red. We've only had 1, 2, 3 bars on the weekly that's actually green. Overall, the stock's going down, right? Now, is this the time? Is this the week and the month that this is going to change green? Maybe, but I don't have to be in a rush to do it. Because if it's going to go green, and even if I get it at 80 and it goes to 150, I'm not missing anything, right? It's at 70, I'll give it time. Me personally. But overall, be patient. Monthly, you got 3 down months, 1 maybe up month now starting. So again, it's been red, 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 red. Simple little check that we just talked about. Call it the simple check. Overall, red, 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 red. Maybe now is the time. We could start there. As a short, I don't know. No. I wouldn't short. I tell you why I wouldn't short it. I wouldn't short it because I'd want to see this short play out more. I got to see more. I got to see more love. If you short, you want to see lots of love where people just fall in love with that thing so much where it's like, you guys are crazy. So, and right now they're trying to nibble it, right? It's like the AMC thing. I like it. Yeah, it's going to go up. It's going to go up, but they're not like in love. They're not like saying, buy it with everything. Once they start doing that, that's when you can look at shorting. Right now, I think it's premature to short. So maybe at 100 psychologically, like it could rocket very quickly. Wait for this thing to pop like this. Like look at that past behavior. When you get a few more gap ups on a big up day, that's when you would do maybe a short like this, gap up like this, or even a big bar like that. Right now you're moving up. Could be shorts taking profits. It could be a tiny little short squeeze, but it's not there yet. It's not like mega love. It's not like Love is Blind kind of love. You need to see some good love to where it's like euphoric love, to where nothing can go wrong love. That's when you short, that kind of thing. You could do it, but I wouldn't. It's too early. Clorox. Okay, so yeah, okay, same thing. Possible A to B, B to C, C to D maybe. Less volume here, little tiny up. If this breaks, that could be a problem. Longer term, you know, you've got support right here, and you could nibble at these levels, right? Resistance at 190, so you're in this range now, sideways. So you're playing these ranges. Buy the dips over here, sell the rips over here, 190 to about, what is that, about 160 or so down here at support. You're kind of trading that range. Stock did really well right here, right? And then we got pullback. You tried to break here. So we tried to break over here. Okay, now you're building a base. So I think from a longer term perspective, let's look at this on the monthly actually. From a longer term perspective, like you see, the stock is pretty stable, right? They're kind of one of those P&G, Johnson & Johnson. From a longer term perspective, it's coming in right here. It's very nice, right? It's possible. From a shorter term perspective, okay, I'd possibly look for a fade at 175 actually, because we got this nasty move. If we get to 175, I'd probably fade it a little bit. You don't have a lot of volume, but that's short term. So short term, I could wait 175 and maybe then sell it. Longer term, actually, you know, you're kind of actually doing a nice little base here, and it could actually be long later on, you know, like 6 month time frame or something, or 2 year, 3 year, 5 year. You know, you're still holding those levels. Okay, hopefully that's enough tickers. We did a lot of tickers today. We've got an hour and 26, so appreciate you guys joining me. We'll do maybe one more if you guys want, but I'm going to kind of wrap it up. My voice is getting tired and I want to make it through the day. You got some banks that are still, you know, powering higher, trying to, like Bank of America, JP Morgan, I've got some long positions on after this oversold area. So it's still, you know, it's going up on lighter volume. So it does concern me to some level. So those things, watch out for. There's always these little space stocks and love stocks, but you see what happens with time. Like people love them over here and then they just die. So don't buy into a lot of the hype. Be careful with all that stuff. Big Blue and let's see, where's Wayfair here? Also, like, you know, same thing. A lot of stocks are oversold, but they're trying to bounce, on lighter volume. So there's a lot of weakness there that's going on with a lot of things. Be careful, spread your stuff around, not just in one spot, not just like, you know, all tech stuff, not just all one thing, like stuff that, you know, all over the place, like on American Airlines, on Amazon, a Costco, a Walmart, that kind of stuff, a chip thing. Yeah, so you guys are doing the right thing, and that'll keep you a little bit out of trouble, because you want those stocks where if you have a net change, like here, you can see some stocks are going up, but then you also see some stocks that don't move with the market, like, you know, but today was kind of an update there at the end. So they're trying to push it a little higher, and you see that, but we usually don't just get to the bottoms, bounce, and we're good. And now, you know, hey, you don't just keep going up. So they don't go straight up. So we'll see those pullbacks eventually, and that'll tell you what's going to behave right here. Are we going to come back to retest the 430? Be prepared to do some protection if needed here soon. And that's what I would be a little cautious about, because even if we get above these levels right now, which we're kind of getting into that level, we're back into the sideways chop range. And that means you cannot allocate more positions here, meaning if you've already got positions you've got here, don't get more stuff here, because the market will burn you. So that's why I allocated more around those levels a bit, because now I got stuff here, I got stuff here, I might get stuff up here. So you got a mix of things. So you're mixing things up, you know, in different spots, trying to play different ranges, right? Not all in one spot. Okay. All right. Thank you so much. Cool. Do you use the heat map to try to see what's hot sectors are for the day, or how do you do that? You could, but the day doesn't matter to me, right? The day is kind of like, or the heat map is market watch, visualize, right? So you got this kind of stuff. You could see, hey, Baba's going up, but again, you know, I'm usually already looking at stuff, and I already know which ones I'm kind of looking to trade. So we've got heat maps here. There's indices and all that. You could, but I don't really use them. like Exxon Mobil, like I know it's extended. Netflix, I know it's pushing higher. I've seen it because it's been on my list because I watched kind of the earnings and I see it's pushing higher, but you know, so I don't really use it too much. It's not anything big because I'm already dealing with the stock itself. Like I have a history with it. We have a relationship with Square. I have a relationship with like XLE. I have a relationship with them and I don't like it. It's going against me. It's powering higher. I don't like it. JP Morgan, I like you, but the price action is kind of weak. AMD, I like you, but I still will short you on earnings because I want to protect my position. So, you know, trade your trade and not necessarily the market. Work your trade, manage the position, manage the trade. Don't stress about the full market. Look at how to manage the position. I think that's usually a better focus. I know it's tough sometimes, but that's kind of the way I look at it. It's like, yeah, I shorted the earnings here. I'll be blown on my earnings trade, but my long investment on AMD is going to be fine. So I'm just used it partly as a hedge to make sure that I don't get into trouble further with the stock. Because I've, you know, was trading it all throughout this time frame right here. You know, I'm trading it here, I was trading it here, trading it even back here. You know, I was trading it all throughout this whole move. So that's why I would put on a short position. Because again, I don't want to keep pulling it back. Anyway, all right. Thanks for joining me. Enjoy the rest of the week ahead, and I'll see you next time.